I just had an awesome conversation with Anthony Scandariato. Anthony is, man, he is very inspiring. He has been in real estate for about 10 years or so. He worked with a company that actually bought office complexes, and he was a W-2, got a salary with them, learned so much over over 6 years working there. And right before COVID happened, he actually left and started his own company, Red Knight Properties. And what's really cool about him, he took a lot of the learnings from his previous job. He is an entrepreneur. Anthony is very big on education. And so they have a free ebook that you can go and download at their website. They do some local meetups and things like that. But Red Knight Properties, really, they want to help everyone invest in that buzz term, financial freedom. They're helping people reach financial freedom. Maybe you want to leave your job. Maybe you want to keep your job, but have additional streams of income. Anyway, I had a great conversation with Anthony. Thanks for checking it out. Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. All right, thanks for tuning in today. My name is Charlie Hardage, and I'm the host of the Passive Investors Playbook. Today, I have a very special guest, Mr. Anthony Scandariato, the co-founder and managing principal of Red Knight Properties. Anthony is a real estate entrepreneur and multifamily investor with a focus on in-place cash flow and adding value to properties. He is passionate about helping people leave their 9-to-5 with passive income through multifamily real estate investing. His company, Red Knight Properties, is a privately held boutique multifamily and mixed-use real estate investment and property management company. They target value-add multifamily and mixed-use properties where they can create significant equity by increasing cash flow and forcing appreciation through capital improvements. The residents and tenants are the lifeblood of their assets. They strive to create vibrant communities where people are excited to live and work. Anthony is based in New Jersey, and you can listen to him on his podcast, Discovering Multifamily, on all the major podcast platforms. Anthony's portfolio consists of over 1,000 units valued at $150 million. So I'm super excited to have Anthony on today. Anthony, thanks for being here. Really appreciate it.
Yeah, Charlie, thanks for having me. And, as Charlie mentioned, my podcast, Charlie was actually on Discovering Multifamily, I believe, last week or so, which is the middle of July of 23.
Yep.
So definitely check out that episode. It was great.
Awesome. And if you're not watching on YouTube, go check out YouTube. He has some really cool, a little portrait of his dog in his background, and it's awesome. But Anthony, hey, thanks for being here, man. Really appreciate it. Do you mind maybe giving some more background to who you are for the audience?
Sure. Yeah, absolutely. And great job with the introduction. A lot of people butcher my last name, so I got to give you props for that. And as Charlie said, I've been working in the real estate industry, specifically commercial real estate industry, for almost 10 years now. Prior to starting my company, Red Knight Properties, which Charlie mentioned, I worked for another real estate operator acquiring value-add multi-tenant Class A office buildings up and down the East Coast. As Charlie said, I'm based in New Jersey, and for context, I'm about maybe 40 minutes west of Midtown Manhattan. And, so I worked for another real estate operator and was able to learn pretty much everything I was there for about 6.5 years. and started out as an analyst and eventually, grew into um, you know, different positions within my role, primarily focused on acquisitions, but saw everything from, capital raising to underwriting to property management to asset management to project management to leasing, pretty much up and down the gamut, a vertically integrated company, and working probably 80 to 100 hours a week with them. And on the side, I was able to I started out, acquiring multifamily on my own with my first two-family house hack, which I'm sure a lot of your listeners are familiar with. I still own it today. I don't live there, but still own it. And kind of got the bug with multifamily from there, although, I was still working in the office industry. And ever since then, I kind of, while I was working the 9 to 5, as you mentioned, I'm pretty passionate about helping people, if they're not happy or if they're just looking to build up extra streams of income, and they have a W-2, real estate is definitely a good way to build up that cash flow stream, depending upon, what the deals look like. And so I was able to do that while I worked. I was able to build a small little portfolio with my business partner, of about 70 units. And then in early 2020, late 2019, we started doing some larger deals, and larger meaning $5 million plus deals that we couldn't buy on our own, just the two of us, me and my partner, and bringing on additional capital partners. We were able to, kind of reposition the 70 units my partner and I bought during that time period. And we were able to use that as case studies, and then obviously, professional experience, working for another real estate operator. And as you said, Charlie, fast forward to today, we have about, give or take, 1,000 units in our portfolio. We've sold quite a bit of properties over the past few years, just because we were done with our business plan. And obviously the market was really, really nuts in 21, 22. Yeah. So we thought it would be good to capitalize on a few of those older properties. We did really well on them, and, probably would have had 1,500 units, but we don't really count the units. It's more about doing quality deals and, making sure our partners and, our tenants, as you mentioned, are all taken care of at the end of the day.
Man, that's awesome. Thanks for that background. So you've been in real estate for about 10 years, but you worked for someone. So it was a W-2. And did you have background in real estate before you went and worked with them?
No, I was really coming out of college. Okay. I had a startup company in consumer products and retail that I ran actually while I was in college with a couple of partners. So I kind of always had a entrepreneurial bug, so to speak, which translated well into commercial real estate. Yeah. And putting deals together. So, no real estate knowledge, but, I do have some people within my family who have helped me, with that transition from, college to, full-time job in real estate. Before I even worked for the real estate company, kind of network and learned how to underwrite, just very simply, smaller properties, and started looking at some small opportunities, and was able to really learn while I worked for the company I used to work for.
Man, that's awesome. So in college, you had a startup. It was retail. After school, you went and worked in real estate, a W-2 in real estate, and that's where you were able to learn pretty much everything that you needed to hands-on, which is absolutely phenomenal. I didn't write it down. I think you said you did that for 6 years, 6.5 years or so.
Yeah, about 6.5 or give or take. But it really felt like I was there for 15, 20 years just because of how experienced the principals were. Yeah. And, they've been through various cycles. You're talking 30, 40 plus years of experience. And, we're able to sit pretty much next to them every single day on phone calls with capital partners, on phone calls, with their on-site property managers, pretty much daily, was able to really, really learn a lot. And obviously put a lot of hours in it, as well.
Man, that's awesome. Free educate. Well, you got paid to get educated basically on multifamily, how to run properties. And something you mentioned earlier, Anthony, you kind of highlighted all the different aspects that you were able to pick up, which, just for the audience, wanted to kind of quickly go back and recap those. I know you mentioned the capital raising piece, and A lot of times on our episodes, we do talk about how it's a team sport. And there's so many different moving parts. If it's a single family home, you're pretty much doing all of those yourself. But in large multifamily, you can't do them all yourself. But it is good to at least have an idea of what needs to go on. And you mentioned asset management, and you were on a lot of those calls with the property manager, which is nice. You're able to raise capital. I know I think you mentioned that you focused on acquisition. So underwriting and kind of knowing some vendors, whether that's insurance or lenders or contractors, whoever that would be. So you've kind of done it all in multifamily. That's awesome. That's great. And I know you're also in mixed use. Is that correct?
Yeah, and just to preface what you just said, the company I used to work for was strictly Class A office. So it was a very different asset class than multifamily, arguably the hardest asset class that you can grasp your hands around. It used to be hotels. Now I think it's office. But yeah, so we do have some mixed use properties in our portfolio. We still have them. And by mixed use, I mean, apartments, mostly in an infill, suburban location, maybe, like a nice suburban town with a nice downtown or whatever. So we have some smaller properties, like a 10-unit property and a 12-unit and another 10-unit. We don't really focus on those anymore. It's a very small portion of our portfolio. But, it's usually two-story building, apartments above, retail, ground floor retail. But, from my experience working for the other company, I was able to learn, what to look for in a commercial lease, what not to do, how to structure, TI, tenant improvement allowances, tenant improvement allowance schedules and leasing commission schedules and a lot of different aspects to writing the lease. And so I was able to translate that over. But right now, we're specifically focused on multifamily.
Awesome. Very cool. So we kind of talked about how you got into real estate, really more as an employee, not as an entrepreneur. Why, when you left your job in 2020, beginning of 2020, why did you then stay in a real estate role or the industry? You left the W-2 just to go and kind of do it on your own. Why real estate?
Yeah, like I said, I was very passionate. I'm still very passionate about it. I still don't know everything, learning every single day. And I think the real reason why I left and didn't stay was because, as I said, me and my partner bought 70 units. And, as I worked full time, he would kind of oversee the management. I would help, obviously, like on the weekends and stuff like that. But, and then whatever capital I could put in, I put in. Same thing with him. So it was very simple. It wasn't anything fancy. And, when it got to bringing on other people's money, for me, it was like, well, I don't want to be working a full-time job and then tell potential investors, hey, I'm like half in this, this new venture. It just didn't sit right for me. So that's really why I left. And, we had a couple of those deals, one close at the end of 2019. So it's like, all right, well, at least that closed. And we had another one under contract as well, scheduled to close like Q1 of 2020, which it ended up closing in Q2, but we all know what happened in Q1 of 2020. So I had a couple of things in the works. We already had our portfolio of 70 units. So I had some, income coming in. So I would have been 26 and a half years old, 27 at the time. So, not married, no kids, very, I have a house hack. So very low expenses. So I just felt like if I wasn't going to do it then, this would never happen. Right. So for me, it was just the right time to make that transition over and, really focus on multifamily real estate just because we bought so many on the side. And I didn't want to go into office. I really kind of saw what was happening with office buildings before the pandemic. Yeah. And, just not very bearish on it, kind of long term. Based on what I was seeing and my experience. I mean, it depends. But on the whole, based on my experience with the small multifamilies, I just saw a much more. It just made a lot more sense to me. Number one, conceptually, and everybody needs a place to live. So, I just found it a little bit less. The risk was a lot less than staying with office buildings.
Yeah, I love that. And I think that, I have some single family, or I did, I've sold most of them. Um, and I'm also a multifamily, and I love kind of, during a downturn in the market, recession, whatever you want to, whatever you want to say, residential, the single family, the multifamily, and even mobile home parks. I know we're not really talking about that, but they do all provide basic human need of shelter. And so I think, I, especially with office, and you kind of saw it before, I think a lot of other people did, but now after the pandemic, after a lot more people are working remotely, I know the office space is kind of going through a crisis right now, I think. Another episode, another time, but I love the multifamily side of things, and exactly what you said. Everyone needs a place to live, right? So I do think multifamily is just phenomenal for so many reasons, but especially that reason. So I kind of want to talk about multifamily and real estate, I guess, in general, but why is real estate so attractive to you?
Yeah, kind of as I was just alluding to, Charlie, with the multifamily, it just makes sense, right? People need a place to live. Was always very interested in rental properties. I had people in my family who own rental properties and have done really well. And those are even small apartment buildings, like five unit here, 6 unit there. And I just found it really fascinating and, something that I was drawn to. And, real estate for me, really changed my life.
Yeah.
Yeah, it really took me on the path to financial freedom. I hate that buzzword, but it's true. The power of just forced depreciation, positive cash flow, whether that's from usually we like to look at it day one, but whether that's forced over time and then you can reap the rewards later. And it's really been pretty transformative to me. And for me, it really was just about, does this make sense? As I mentioned, I was in a retail business, which was also tough and challenging. It wasn't something I was passionate about, but for me, it was about, what are you passionate about? And as I bought that first two-family property, I just got hooked after. So it really for me, it was more, I don't want to say a passion project, but if you're going to work, you really have to love what you do in order to be happy.
Yeah.
So for me, and obviously it provides a lot of financial benefits and rewards, but you got to do it right. That all just comes with experience, making sure, you put the right debt structure. A lot of people are getting caught up with the debt structures right now. So, mitigating risk, factors that can mitigate risk, I kind of learned from the other company I worked for, and, I'm applying it to our business now.
Yeah, that's awesome. You mentioned that real estate kind of changed your life, and you don't like the buzzword, but financial freedom. I have a very, very similar story with how when I first invested in real estate, it was passive. And man, it really, truly impacted me so much because I knew I didn't want to invest in the stock market, or I didn't want to put all my eggs in the stock market. I wanted to get into real estate. I didn't know how or why or when, what to do basically. And when I heard about the fact that I could passively invest in multifamily, I was like, man, this is great. And so I jumped at an opportunity, and within a couple of days later, jumped at another one and invested into two within a few days. And so I really truly felt that my financial freedom clock started ticking the day I wired my first investment over. Mm-hmm. And one of the other things besides financial freedom, one of the reasons I got into this is time freedom, because I basically want to be able to do what I want when I want. Doesn't mean I have to be a billionaire or anything like that, but I want to be able to travel or spend time with family and kind of do it on my own time. And I know the time freedom is something that real estate, I'm sure, has afforded you as well. And you work for yourself, so it's really nice that you can do that, and you can be your own boss. You have control. So
yeah, at the end of the day, though, for us, we're really working for our partners, our investors, our tenants. So for me, especially as you got active as well in real estate. Once you're active, it's definitely a lot different than passive investing. But that's
Sure.
good to get your and a lot of people who I'm involved with get their feet wet in passive investing and then they become active, which is a great trajectory. But there's not always I would say one size fits all to get into the industry, but that is one great way. Because if you invest passively, you can reap the rewards without really, I don't want to say without doing anything. You got to do your due diligence, of course, but you can kind of see what the operator's doing, and then you can hopefully apply it to what you want to do in the future. Or if you just want to remain passive, that's fine too.
Yeah. So Anthony, I want to ask you, because in the bio, in the introduction, I mentioned that you're helping other people leave their 9 to 5 through passive income. I'd love to kind of do a deep dive on that, and explain to the audience how you're helping people leave their jobs, and maybe they don't want to leave it, but it's just an additional stream of income.
Yeah,
go ahead.
Yeah. So there's a few. I really love working with some of our younger investor partners. I've had one guy who came in, I think he was 20, and I think he put 50,000 in maybe our second syndicated deal.
Okay.
And I think I've turned over that 50,000 for him like 4 or 5 times.
Yeah.
So it's really cool to see that. He's still, working full time. I think he's 24 now. But I really, really love working with younger folks like that are eventually, maybe when they're in their 30s or 40s, looking to leave and just, either retire on passive income that they built up, or at least now they have a nest egg from all the opportunities that we've done together. So we really one great example. We work with a lot of real estate agents as well, or even really commercial real estate brokers that come in our deals. And, especially right now, 2023, transaction volume's down a lot. And, a lot of brokers are feeling it in terms of just not generating the money from transactions. But we have quite a few that have come in our deals that, hey, they're still getting distribution checks in the meantime, and they're not going to go broke, or they're not going to starve. So, like you said, it's more of a supplement to some W-2 jobs, or it's a stepping stone to eventually getting out of that. And I've had some other instances when people have left their businesses, and I wouldn't say it was because of us and our deals, but of course that's one of the catapults. And we focus a lot on, you mentioned my podcast, education too. Very similar. I have guests on, I had you on, and it's great to be able to share that with my audience. And a lot of my audience is people that we partner with, and to hear other people's stories and hear their challenges and how they got to where they are is really rewarding, because I get emails and texts all the time from our existing partners. They're like, oh wow, I really love that guest Charlie, or whatever. I'd love to be like him someday, or a really cool story. So it's kind of, I would say, the ecosystem that we've built around our company, and it is kind of just a catapult for people to look for, I guess, financial freedom, that buzzword.
Yeah, and it is interesting, because with my podcast and just being on social media, being on your podcast and other podcasts, I have had a lot of people that want to kind of get into the game, and they're like me, they don't know how, right? Maybe they want to flip something, or wholesale, or BRRRR, whatever it is, and so I think what you're doing, Anthony, with the educational piece with your podcast. Do you have a meetup as well?
Yeah, we have a meetup, usually ran in New York City or New Jersey. The city events are usually every month or so, and then the New Jersey's maybe every quarter. Okay. So we do have a meetup as well, and that's strictly networking. We've had some presentations, and we do webinars every once in a while as well. So we do have a meetup page, Discovering Multifamily Association, same name as the podcast. Try to keep everything consistent.
Yeah, that's awesome. I think a lot of people, because this is not multifamily syndication space is not this massive market like IRAs, 401ks, and so I think it kind of is on people like me and you to get the word out, whether that's podcasts, meetups, just social media, telling friends and family, because there's so many people kind of like us, years ago that are looking for something else other than the stock market, other than the quote unquote traditional path. And so I know with your podcast, you're at like 235, 236 episodes, which is amazing. So you've been doing that about 5 years?
A little over 3 years. Yeah.
Oh, okay.
Obviously, when we were all at home, I always wanted to do it, but it really set the trajectory up to have multiple episodes over a certain amount of years. So yeah,
Gotcha.
it's a lot of fun.
Yeah.
We get to educate, we get to network with different types of people and learn from each other. And then, like you said, broadcast it to the world pretty much.
Yeah.
But obviously your core audience. So
Yeah.
great.
I do think it's great. And I think there's so many people looking for something else. And, that's one of the reasons you started your podcast. One of the reasons I started my podcast is just to kind of get the word out and help other people achieve that buzzword of financial freedom or time freedom. But really more than that, instead of just the financial or the time freedom, really just kind of give them that control and allow them to, whether they want to stay at their job and have additional streams of income, whether they want to leave their job, whether they kind of want to be like you and leave their job and go do their own thing, right? That's there's so many possibilities. And so I love kind of what one of your core values is helping other people leave their job, leave their 9 to 5 and achieve financial freedom. You left your job in 2020. I left mine in 2022 in April of last year. And so it's been a big change, but I truly feel like we're helping a lot of people as well. I want to talk about your company and maybe some goals over the next 9 to 12 months.
Yeah. So I mentioned before, we have about 1,000 units in our portfolio. We also self-manage. I'm not sure if I mentioned that. So we have a property management company as well. I have a whole staff dedicated to making sure our properties are performing and hitting each metric in our business plan that we're projecting or going above and beyond. So we have quite a few new acquisitions that we're working on right now. We do have some opportunities that we acquired in 21, 22. 22. And so for us, coming into, we're recording this the end of July of 23, coming into, most anticipated recession in, at least my lifetime, a lot of other people's lifetimes too. It's like, when is it coming? So we're being very cautious in terms of new acquisitions right now. We're kind of buying where we know and being able to leverage our management and our infrastructure that we built. And we're also, not done with some of the other deals that we acquired. We're getting there, but we want to make sure we're in, everything is stabilized and, I'm very project by project based. And hopefully we'll have a few more acquisitions. We might have work on a couple of dispositions right now as well. So we're kind of always moving and grooving, so to speak. It'll be interesting to see. We have a opportunity closing kind of like Q3 23 of this year. Once we close on that for an acquisition and a sale, actually, we're kind of going to sit down and evaluate where we're going to be from there. And hopefully at that point in time, we'll have a little bit more of an idea what's going on with the economy. So we take a measured approach. I'm not one of these guys or, Grant Cardone buying 10,000 units and has no idea what the hell he's doing. Sorry, but, at a time, I mean, it's great to go big and, you build your infrastructure and your team around you. But, I just from working in the industry and kind of seeing how deals can get blown up, during that time period, I could grow a lot faster, I think. But, for me, I always take a measured approach in how we're looking at growing the business.
I love that because I know a lot of people at the beginning of the year, myself included, my partner and I included, had a goal to get into 4 properties this year. And our number's at 0 just because there's not many deals. Deal flow is way down, and we've only put 2 offers in on property this year, as opposed to about 2 a month last year. And so I'm with you, Anthony, the kind of slow and steady approach, more calculated approach, as opposed to buy everything you can just because it's on sale. So I do like that. Who knows what the economy, it's, says we've heard for, I don't know, years now, a recession's coming. And I read last week that maybe it's not coming. So who knows?
Yeah.
But it is kind of all over the place. And I know some, in commercial real estate, some asset classes like office space are just getting decimated right now, and lots of vacancy. But at least where we're at in apartments, they're still doing great, still doing fine, high occupancy and very, very low vacancy. So that's good for us and our investors. But I know previous, and we haven't spoken about this yet, but you were an intern for a financial company towards the beginning of your career. Were you interning to be like a financial planner, or was that on your path, you thought? Or
I was very young, trying to learn, what my hat wanted to be put in the ring at the time. That was a good experience as well. It was really more of a sales experience, and got to learn how to interact on the financial. That was more on the financial planning side. So obviously dealing with different financial products. That experience definitely helped, kind of catapult us to where we are. It really taught how to maybe analyze different investments, outside of real estate, and kind of what you said before. For me, I kind of learned I wanted to, you mentioned the word, have a little bit more control. For me, I saw a different product, annuities and investing in the stock market or just index funds or whatever. And I just didn't, it's kind of boring. I mean, I didn't really find that super attractive. Obviously, as a younger guy at the time trying to build wealth eventually, I still get nervous. I have some money in the stock market. I still get nervous. It's not all my eggs in one basket, but with the real estate, I'm not nervous at all. We've taken, hundreds of millions of dollars in debt, some of it non-recourse, most of it non-recourse, some of it recourse or partial recourse. And I still sleep at night just because I sleep at night better about the real estate than just the stock market. So it's different risk tolerances, I guess. But you said something about control, I think really resonates with at least me and hopefully with both of our audiences.
Yeah. So it sounds like then, Anthony, that was you're kind of dipping your toe in the water. It was a very good experience. You got to learn about different types of investments, but ultimately you just thought real estate was a little more, I don't know if sexy is the word, but it wasn't boring, just because there's so much you can do with it.
Yeah. And the good thing for us in terms of the control, like for me, I don't want to say I'm a control freak, but at least with our business a little bit, just because you want to know what's going on at the properties at all times. So it's basically a living, breathing asset. So for us, we always update our, partners at the end, pretty much on the dot of each month. Okay, where are we? And it's good for us too, as sponsors, to figure out where are we with occupancy? Where are we with collections? Where are we with the CapEx plan? Where are we with, rents relative to our projections? How is operating expenses this month? And, it's kind of painting a picture at the end of each month and working with our on-site managers. If everything is going well, then we can sleep at night. But it's more living, breathing. You can't, like you said, you can't really control what happens in the market. You can check CNBC pretty much every 2 seconds, but what is that going to do for you? I just don't like, I just never really liked that. Just because you have no control over it. With the real estate, you do have control. I mean, that's really one of the reasons why we self-manage, just because I've hired third-party managers. I've dealt with third-party managers, whether it was at the old company I used to work for or our current company. And, 9 times out of 10, it just they're not up to our standards. So that's why we started our own management firm, to have more control just over everything going on. Yeah, it's a lot of work. It's a lot more work, that's for sure. But it just allows us to sleep at night. And if something goes wrong, it's on us. It's not on we can't blame third-party management. We blame ourselves. So it's very challenging, but, we're able to overcome a lot of the hiccups just by having more control.
Yeah, man, I love that, because they're whether it's single family, multifamily, whatever, you have to find a great property management company, And oftentimes, like you said, they're not necessarily up to your standard because, you know, and you said the word control freak, or the term control freak, and I don't think that's true. I think you're being extremely smart about it, because these are huge assets, right? They're not $100,000 properties. They're multi-million-dollar properties with a lot of moving parts. And, you know, at the end of the day, you want to make sure that you're providing a safe community for the residents, but then also you have investors as well that, you know, you said there'd be some type of return. And so it is on you and your team, because you do have the property management company in-house as opposed to a third party.
Yeah.
And so I think that just kind of gives you, it's more work for you and your partner, but you do have more control and can, you know, honestly, it's probably one of the reasons you've had so many really highly successful exits, because you have been able to control it, and you know the timeline, and you tell the property management company, and they have to do it because they work for you, not for you know, a different employer. So
Yeah,
anyway,
no, absolutely, and you know, we've self-managed kind of from the beginning, so we were able to learn the ropes. Yeah, even with our large, you know, our first syndicate 50 unit was like a $5 million deal. It was pretty local to us in New Jersey, so we were actually going up there for the first 3 months, knocking on residents' door, negotiating, relocating tenants, and negotiating cash for keys. It was pretty crazy. So we're able to learn a lot from that. And then anybody who we hire, we kind of are teaching them the same techniques, or if they have experience, you know, we learn from them as well. But to your point, I mean, these are sometimes hundreds of millions of dollars you're dealing with, or tens of millions. And, you know, and it's not, at least for us, it's not all of me and my partner's money. Yeah, we do contribute a good amount, but it's, you know, a lot of friends and family and our greater network that we're dealing with. And, you know, that we have to make sure their principal is always protected. Yeah. And, you know, the way to do that, I mean, if I hire a third party management company, they report to me every month. Like I could go in and check how everything's doing with the management software, but they're probably going to get annoyed. Okay, why are you calling me every 2 days, or why are you texting me? Like everything is like, okay, like, but with us, we're able to see that. And we've had instances where it's like, why the hell do we have 10 vacancies right now? It's like, so we called the leasing agent and say, what's going on? And then they explain. So, you know, definitely, yeah, like you said, it's not really a control freak, but it's important when you're managing other people's money, including your own. You know, you have to make sure it's protected. So I totally agree.
Yeah, and you know, I think we're in the same mindset here, but we want to make sure that we can do the best we can, right, with these deals. You know, is it easier to hire a third party? Yeah, absolutely. Does that mean it's better? Not necessarily. And that's something too, Anthony. My partner and I, right now we're using third party across the board with all of the properties. I think long term we do want to go that route. Third party, you know, goes by, and we start hiring people and kind of do it ourselves, because I do think, you know, and there's third party property management companies that are really good at certain things, right? Like maybe they do the value add or whatever, and they typically know the market better than we do, I think at the beginning. But you know, there's still there can be some issues, I think, with third parties. So long term, we want to be doing what you're doing, you know, in your company, with having our own property management company.
Yeah, it's about priorities too, because, you know, like you said, you know, they're not going to take as well care as the asset as you are. You know, at the end of the day, and we've seen that, and they're not going to be as responsive as one of your employees is going to be if you call them, and if there's an issue. But you know, there are really good third-party property management companies. They're out there. They're very tough to find, but they're out there.
Yeah. So we have a few minutes left, and before we go into the last few questions, love to kind of ask you about your podcast. I mean, obviously, I was on there. It was released around mid-July 2023, I think episode 235. But do you want to give maybe like a you know, couple minute overview of your podcast and who your target audience is?
Yeah, no, as we talked about before, we're all about, basically education first. So my podcast is called Discovering Multifamily. So we're discovering this asset class within real estate, multifamily, and what it's been, how it's been beneficial for me and my group now that we built out. And hopefully we can bring more people into that fold over time. And it's, 20 to 30 minute, just like this, conversational style podcast as it relates to most of the time it's about experience and history. If they're in real estate, we have some different types of guests. I have vendors on, so I have like a lot of prop tech companies and maybe insurance companies on. So it's everything related to the industry, even though it might not be operator focused. And we just have a conversation, pretty much every week. And we're able to add value to our audience and us. And it's been really fun in the meantime. And, our message is, for a lot of different types of people, whether they're passive or they're active or they're working in the industry right now and they're looking to, like you said, get out of what they're doing and get into real estate. It's just been really, really fun to provide a lot of value. And, it's probably while we're recording this, someone's listening to you on our podcast, someone's listening to me. So it's just cool to always think about, okay, you're and also leaving a legacy too, whether for the next generation, because hopefully the podcast will still be a thing, 20, 30 years from now, or adapted into some other format. So I think that's really cool as well. And, for us, you can, just like you can find us on iTunes and pretty much every Spotify, pretty much every platform we have on our website as well, on the media section to listen to it. But yeah, definitely check it out.
Cool. Yeah, no, I definitely appreciate that. I love being on your show last week. One of the really cool things about, I started my podcast just to kind of get the word out about multifamily syndication. I've had so many people reach out to me and like, oh my gosh, this is great. This is amazing, because like me and maybe like you, didn't really know where to turn back in the day, right? And so the fact that you can get into real estate passively, at least to start, really it can be extremely impactful. So I love doing mine. I'm sure you love doing yours, especially because you're in the over 200 episodes. I'm only about 20 something, but anyway.
And what's interesting too is we get people who think they want to go active in real estate, and then maybe they come in one of our deals and they see what we're doing. You're like, you know what? I don't really want to do that. It's too much work. So, you learn over time what you want to do. Yeah.
I know several people that are just serial passive investors. That's all they want to do. And, doing extremely well, going that route and don't have to leave their job, or maybe they can, whatever, up to them. But very cool. So Anthony, what's a recent book that you've read or listened to that stands out, real estate, business, self-help related?
A recent book. I mean, my favorite's Rich Dad Poor Dad, but that's kind of a cliche answer. Recent book, I gotta get back to reading. Quite honestly. But I should have read it a while ago, but The Miracle Morning.
That's a good one.
It's really good. I really like it. Started implementing a lot of those techniques. Really, really good read. In order, and to help you in any aspect of your life, but pretty practical steps to take to basically, boost your energy and your focus, and it works. So it's pretty cool. I want to get into more reading this year.
I listen to a lot of books on Audible just because I don't like to read, but I've actually listened to Miracle Morning, and I've read it a few times by Hal Elrod. Mm-hmm. Great book. It's a pretty short read, pretty quick read. But yeah, I love that book. I know we kind of talked about some company goals over the next year or so, but what can people expect to see from you and your business over the next 5 to 7 years?
I mean, that hopefully pretty consistent with what we're doing now. We're able to grow more in markets that we like over time. We're able to have, as you mentioned, more successful exits, and just kind of keeping that keeping that momentum going and, growing the wealth of our group that we built together. And yeah, I mean, I'm not planning on leaving the business in 5 years. So, I'm should still be here. So you'll still see me around. It'll be interesting to see what happens. I think, this period of time in 2023, as things kind of work itself out with the economy, after this, I think we'll be able to understand where we will be long term. But I don't think our fundamental business and mindset has changed, still hasn't changed, regardless of all the volatility. As you said, people always need a place to live. We're focused on workforce housing and growing markets and, trying to buy from long-term owners and so on and so forth. So I don't really think that's going to change in terms of our investment strategy. Maybe some of the quick get in, get outs might change. Maybe it's more longer term. I mean, it always starts out longer term, but then, sometimes it's like, wow, it's kind of enticing to get out of these.
Yeah.
But, maybe that would be more set up in the future.
Cool. What's the best way for the audience to reach out to you?
Yeah, as mentioned before, we do have a free ebook on our website, How to Leave Your 9 to 5 and Achieve Financial Independence. You could find that on our website, redknightproperties.com. So if you put your name and email in, I'll actually email it to you. And then in that email, it'll have all my contact information, my email, my phone number, Facebook, Twitter, LinkedIn, Instagram, you name it. But you can find me on there anyway, Anthony Scandariato, or my company, Red Knight Properties, pretty much everywhere. So feel free to connect, but definitely the best way is just get that ebook on our website, and I'll reach out to you, pretty personally, and hopefully set up a time to chat.
Cool. And then I know you mentioned a bunch of social media handles in there. We'll put those in the show notes as well, so people can reach out on their platform of choice. And then I know you mentioned the website already, redknightproperties.com. People can put their information in to get that free ebook. You will reach out to them, and then all the social media handles are on the signature. Is that right, of the email?
Yes, that's correct.
Perfect.
Yep.
Perfect. Cool. Anthony, man, I really appreciate you being here. Appreciate you having me on your show last week. It's been awesome talking to you. I love your story about getting into real estate kind of just as a W-2, realizing it was great, and then leaving your job to help other people kind of achieve the same goals that you did, of whether that's leave their job or help them in retirement with your favorite buzzword, financial freedom. But yeah, really, really appreciate you being here. Thank you so much for being a guest and sharing your story.
Yeah, no, thank you so much, Charlie. This was awesome.
Yeah, have a great day, Anthony.
You too.
Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.